Both Apple and Tesla have witnessed a huge amount of growth over the last 12 months. For Tesla, the stock price has increased by over 600%. For Apple, the stock price has also doubled. With a stock split inbound for the end of August 2020, how will this affect the stock prices for both Tesla and Apple moving forward? What is going on, guys? It's Thomas here, and today we'll be discussing the stock splits announced for both Tesla and for Apple stocks. Split for the 31st of August 2020. For Apple, the stock split will be 4-1, and for Tesla, the stock split will be a 5-1 split. Today we'll be discussing how the stock split will affect both the Tesla and Apple stock price, and how they potentially could see an increase in stock prices in the short term. If you do enjoy this video, please make sure you drop a like and also hit that subscribe button and the notification bell. That way you can keep updated with any future videos moving forward. So first, we'll just quickly recap exactly what a stock split is. So basically, if a company announces a stock split, this means that the individual stock will be split into multiple stocks. So let's say you have a stock worth $100 and a company announces a 2-1 stock split. So this basically means that every share that you hold will be split into 2 shares. So your $100 share will be changed into 2 $50 shares. So there is really no change in the market capitalization of the stock. There is no change in the intrinsic value of that share. It's just the way to be able to create more shares for that company. So by splitting up the stocks, the share prices will drop and there'll be more shares and more volume in trading. So for Tesla, currently the stock price is sitting around $1,600 as of today. This means that for every $1,600 share, it will be split into 5 shares of around $350. And for Apple, the stock price is sitting around $450. So this means that for every share of Apple, this will be changed into 4 shares of around $110. And this will take place on the 31st of August for both companies. So if you own shares in Apple prior to the 24th of August, your shares will be split into 4. And if you own shares in Tesla prior to the 21st of August, your shares will be split into 5. Now, stock splits are a pretty common mechanism for large companies looking to increase the trading volume of their share price. And typically you find the companies which do announce stock splits are companies in a growth stage, companies which are growing and the share price is becoming large. And by splitting the stocks and announcing a stock split, they're able to bring the share price down and increase the volume of trading for that particular company. Now, like I said earlier, there really isn't any intrinsic value and any intrinsic effect in the actual share price of the companies which announce a stock split. There's no change to the market cap, and that's the main feature which you should be looking at when looking at individual stocks. So the actual market capitalization of that share and of that company is not changing whatsoever. However, the only effect is that there's going to be more shares in circulation, which will inevitably affect the trading volume of that company. Now, stock splits can be pretty expensive, so there must be some pretty positive effects for stock splits for companies to go and spend the money to initiate a stock split. And today we'll be covering why companies would look to initiate a stock split and what benefits could the investor have in companies which do proceed in organizing a stock split. Now, one of the main reasons that companies will organize a stock split is liquidity. The fact that there's more shares in circulation means that it's easier to buy and sell stocks within that company. So let's say, for instance, if you're looking at Tesla, the stock price is at $1,600. Now, if you're looking to buy and sell out of Tesla, it can be a lot harder than it would be to buy and hold out of a company like Microsoft or Amazon, where there's a lot more shares in circulation. On top of this, if the share price is continuing to grow and is becoming too high, then companies will initiate a stock split to bring down the share price and make it easier for retail investors to participate in the trading of that company. So if you're looking to buy shares in Tesla, in most countries you have to buy a complete share in that company. In America, for instance, you can buy fractional shares. However, in countries like Australia and Canada, you aren't able to buy fractional shares on the exchanges. So by splitting the stocks up and bringing the share price down for Tesla to around $350, this makes it a lot easier for retail investors to invest in the companies. And if there's more investors invest into a company, the market cap is going to increase and the share price too will increase. By decreasing the stock price like this, they're not losing any market capitalization. However, they're having a positive effect on the psychological barriers of retail investors looking to invest in a particular company. If retail investors see the share price is extremely high, they start to lose value in the company. So let's say if Tesla's trading at $1,600, obviously there's a lot of barriers to entry for a retail trader to invest in the Tesla. Considering the extreme growth which Tesla's had on top of this, there's a lot of barriers to entry for a retail trader looking to invest in the Tesla. However, if the company is able to reduce the stock price by keeping the market capitalization the same, this is going to result in a reduction of a lot of psychological barriers for a retail trader looking to invest into Tesla. Now, I know obviously there really isn't any intrinsic change. However, there's psychological barriers which retail traders and retail investors will have on particular companies due to the fact of the share price of that company. What you'll typically find is that retail traders will be more inclined to purchase stocks which have a lower price. This is due to the fact that the typical retail trader psychologically wouldn't be able to see a change of share price from $200 to $300 as easy as they would seeing a share price change from $2 to $3. Obviously, there is no change in the value of the share and the intrinsic value of that company. However, it's just a psychological barrier which some retail traders will have, and by splitting up the stock, the company is able to reduce the barriers to entry for that company. On top of this, if there's investors which are looking to reduce their position size in a particular company, for a company like Tesla where one share is $1,600, they just want to reduce their position size by a minimal amount, this really isn't possible. So if you want to reduce your position size, you're going to have to sell complete shares. So you're selling $1,600 per share. Therefore, it's going to have a huge effect in the portfolio of that investor. However, if each share is worth $350, the investor is going to be able to reduce their position size in a lot easier. Obviously, the share is going to be more liquid as well, and the share price is going to be less. So therefore, it makes it a lot easier for an investor to reduce their position size in a particular company when the share prices are reduced through a stock split. So now we'll discuss the historical changes in companies which have initiated a stock split previously. So like I said earlier, stock splits theoretically have no change in the intrinsic value of that company. It really is just an accounting adjustment. You're basically increasing the amount of shares in circulation and dropping the share price at the same amount. However, typically, due to the fact that the stock prices have decreased and there's more shares in circulation, this has typically resulted in an increase in trading volume in the short term. So typically what you'll find, and you'll see this if you look at the share prices for both Tesla and Apple over the last couple of weeks, since they've announced the stock split, the share prices for both companies have grown pretty dramatically in the short term. For Tesla, it's around 18%, and for Apple, it's over double digits as well. And this is due to the fact of investors trying to get in and buy shares in the company prior to the stock split. And this is pretty standard for companies looking to initiate a stock split. Once the announcement comes in, typically the share prices will increase in the short term. And prior to the stock split happening, they'll typically return to normality, and the share prices will slowly come down to what the levels were previously before the stock split was announced. Then once the stock split does happen and the shares are split into multiple shares, there typically is an increase in trading volume again in the short term, and this is due to the fact that investors are looking to buy at the lower price initially. On top of this, if traders are looking to buy in lots of 100 shares, typically this decreases your trading commission costs as well. So by having the lower share price, it reduces the barrier of traders looking to buy 100 lots of a particular company as well. So there's obviously multiple benefits for the investor looking to invest into companies which are initiating the stock split. And like I said, the main one is the fact that the share prices are lower. This means that potentially investors are able to buy more shares in the company. It lowers the barrier of entry due to the lower share price, and it increases the liquidity, therefore making it a lot easier for investors to buy shares in that particular company. So my prediction is that the share prices will start to come back to the previous levels prior to the announcement, and then eventually once the stock split does happen, the share prices will increase in the short term. You can look at the historical effects of stock splits for Apple. Apple have already initiated 4 stock splits previously. And what you'll typically find is that the share prices will increase pretty dramatically over the short term once the stock split is initiated, and then they will return to a typical growth rate after the kind of wind is blown over from the stock split. At the end of the day, I don't have a crystal ball and you can't exactly predict where the prices will go in the future. However, I do predict a short-term growth in the share prices after the initiation of the stock split, and then a return to typical growth in the future. Obviously, both companies have had extremely high growths in the long term. Tesla have had a huge amount of growth in the last 12 months. So therefore, I do see a continuation in growth for both companies. There's going to be a large amount of growth in the short term and then a more stable growth in the future. Thank you so much for tuning in, guys. If you do have any questions, please feel free to comment down below. If you did enjoy the video, please make sure you destroy the like button. Thank you again so much for tuning in, and I do look forward to seeing you next time.